think the coins come into a buying window here, folks. And I don't know whether you can see this or not, but what 3-bar pattern is this? Boom, boom, boom. I can take away the reload zone box. Hopefully you can see that. Down, new low here. This low is slightly higher than this low. This low is slightly higher than that low. So 3 bars, boom, boom, boom. Yeah, it's a fractal. So if we get a reversal above this eye, that's a buy signal. And what a coincidence, 19,988.86. So what that really says is if we accept above this level, then we're accepting back above 20 Gs, big fat round number. And we'll probably oscillate the same amount that you see this distance back to the upside above 20 Gs. That wouldn't surprise me. Is this actually like an outright buy signal today? Not. The fractal has not fired. And of course, Brian, he loves his big W's. If I get a nice little W down in there, that would be perfect. Right now, I'd say it's trying. Same sort of thing on Ethereum. Interestingly enough, we'll do another quiz here. What 3-bar pattern is this? This feels like deja vu. There, there, and there. And that means that that's there. Now, did this signal fire? Yeah. I would say a trade, this high here is 1,084. So a trade up through that high, to me, that looks like it did go through there. Trade as high as 1,087. So I'd actually consider that actually has triggered. Of course, we are in a reload zone. So, interesting. The only thing I suppose that's missing here from our sort of 3-step setup is, do we have any kind of bullish divergence here in momentum? Nothing out of our momentum indicators yet. So you want to try and front run this? Well, I suppose you could. I mean, you've got trade location. You do have candle body structure to frame your risk. We just don't have anything from the indicators. Good thing is, Willie is stupid, so this is sort of setting up. If anything, what I'd like to see is maybe a nice little pop up here, which forces all the momentum indicators to all turn up. Then we come down, maybe swim against these lows, create that divergence. Then we put in a W, and away we go. So, yeah, ironically enough, the fractal signal, I think, did confirm there. I mean, that is valid. I suppose, I wouldn't fault you if you said, well, Brian, I love reload zones. They're the shit. And Willie is nice and stupid. So it's not like I'm walking into an overbought market. I'm just going to, number one, what's our knee-jerk, keep it simple, stupid, price objective tool we should be using? Thank you. So 50% rule. Oh, what a surprise. Yeah, it looks like that's actually, this is the other way around. So 50% rule. There. If anything, this gives the market the opportunity. It can stab up into ATR and you get your 50% level fill. Makes sense. Also, too, if we're thinking look left, what a surprise. There's the last sort of key pivot. It's the 50% rule. And then the next pivot is that ATR level. Again, nice little trade window. And then really the question is, what happens if I actually buy that, risk to those lows, and look to take profit at the 50% rule? Is that a 2-to-1 risk reward setup? And oh, what a coincidence. It is. So I get the impression we're probably closer to a bottom than a top, to be honest with you. This is a really, really good example of, there's a million different ways to skin this cat. No one way is really right or wronger than any other. Here, I think, are 3 perfectly valid trade setups. Perfectly valid. And really, it's just a question of, okay, we got to figure out which one speaks to you. 2022, on the whole, I think we're going to see some sort of seasonal bounce here, and we rally into like August, September. I think you can make the argument that, hey, you know, whenever I see markets crash, boom, and I see a quick W come in, well, I'm just going to buy the W, look for a 50% retracement of that range, and just risk the W. That's perfectly fine setup. That's what this is. There's nothing wrong with that at all. You want to sprinkle in some divergence signals. All right. So now we have trade location, bullish divergence, W in price. Away you go. The more conservative market participants, you know, like things like mutual funds and stuff like that, I don't have a problem. Keep in mind, this is like a 4-hour chart. What happens if I go to a daily chart? Well, you know, there is that big fat W. Down, up, down, breakout. Well, we did close above these closing highs, so clothesline it is. And on an intraday basis, 21,868. This high here, 22,4. So that confirmed. Of course, we call this the noob stop. So probably odds are they're going to go and try and flush these lows here just to get some cheap liquidity. So that setup, and that's this big one here, that setup is valid, 2-to-1 risk reward. And now, interestingly enough, I kind of like this trade, especially with the fact that the dashboard the other day, and I even publicly mentioned this, right? The dashboard the other day was screaming, don't touch crypto. And more importantly, I think Josh even exited long positions. I don't know whether he strapped on new shorts or not, but again, the breadth indicator here flashing a major, major warning sign. We are officially overbought above 80, and we got a really nice bearish cross there. So whether it be just the crypto top 30 breadth indicator itself telling you, hey, you know what, cool your jets, maybe just sit on the sidelines, or whether it be histogram 100%, or it was about 80-85% bullish short term, 80-90% bullish medium term. Hey, cool your jets, maybe just back away. That's worth the price of the subscription right there, folks. I mean, if you were like buying Bitcoins, did I just save you? Even one Bitcoin, right? Let's say, well, I was thinking about buying this, and then your indicator started saying, hey, maybe I should cool my jets. So I was thinking about buying at 21.5, and here we are at 19.8. That's $700. That's the price of the whole subscription right there. Is that worth it?